Welcome to the Tax Talk, where we simplify tax administration in Lagos State and connect policy to practical realities for residents. Not just for residents, but also for businesses and professionals as well. My name is Titilayo Oyinsan, and on this show, we move beyond the headlines to understand how tax laws are interpreted, implemented, and experienced. We begin with business news. Stay with us.
This is business news. Lagos taxpayers may soon benefit from increased economic activities as the Lagos State government announces plans to begin Phase 2 of the Lekki Deep Sea Port project. Governor Babajide Sanwo-Olu made this disclosure at the Invest Lagos Summit 3.0, stating that the port's rapid growth has accelerated plans for expansion less than 5 years after operations began. According to the governor, the existing facility is already approaching its installed capacity, making further development necessary to support rising trade volumes and investment opportunities. Sanwo-Olu noted that the expansion is part of ongoing infrastructure projects funded by the state to strengthen Lagos's economy and improve its competitiveness as a business destination. The governor added that the second phase of the Lekki Deep Sea Port is expected to increase cargo handling capacity, attract more investments, create jobs, and generate additional revenue that can support public services and infrastructure for residents. He also highlighted Lagos's strategic position under the African Continental Free Trade Area, saying the state is well placed to benefit from expanded trade across Africa. And that's it on Business News.
Welcome back to the Tax Talk. It's time for corporate talk, and this is where we engage officials responsible for translating tax laws into real administrative practice and professionals who are entrenched in the tax space as well. Today, we focus on policy interpretation, stakeholder engagement, and how statutory provisions become practical guidance. Joining us is Mr. Abideen Akande, Special Advisor to the Executive Chairman of the Lagos State Internal Revenue Service. Mr. Akande, welcome to the studio. Thank you so much for being here.
Thank you for having me, Titi.
All right, so you are the Special Advisor. I have to be sure that, there's no major assignments pending. Do you have time for us today?
I do.
You do?
Yeah.
Fantastic. All right, let's begin.
Yeah.
All right, so you sit at the intersection of policy, design. You sit at the intersection of operational execution. So how would you characterize the fundamental shift that the new tax laws represent for the Lagos State Internal Revenue Service's mandate and institutional culture?
Okay, all right, thank you. So the primary thing to understand is that we're coming from a model which is principally driven by enforcement.
Okay.
You understand? Because it's the assumption that people will always do, they don't want to do the right thing. So you put premium on enforcement. Now, we are going to an era and a model that is data-driven,
okay,
compliance-focused, and then service, I would say, yeah, in terms of, it is also service-focused because you want to simplify things for people. So we are moving away from that. So it's more of getting people to understand that these are your rights, and then your engagement with us is also simplified and made much more pleasurable. And then because you have those rights, you also have obligations, because that's what people always talk of rights without thinking of obligations. The obligations to you now is compliance. And what we do at our end, at the policy level, is to ensure that the cost of compliance is reduced to the barest minimum to make it easy for you. And then we ride on the fact that now we have access to data, so we can see you. So if we tell you that we can see you, there's no need for you to hide from us. So you come to us with what you have, and then we sit down in a cooperative compliance model so that you also will be compliant and the government will also do the right thing. That's where we are.
Amazing. So when I started speaking, there was a line there, stakeholder engagement. So I'm not sure if everyone is clear who the true stakeholders actually are.
Now, for tax, every single individual is a stakeholder, because, like they will always tell you, the things that you cannot avoid is death, change, and of course tax. So all of us are stakeholders. But the secret ingredient of our success in Lagos is the fact that we have always recognized the fact that there's a need for you to segment.
Okay.
We have the upper echelon, the middle bulge, and then, of course, the base. So our approach has always been that our engagements with all those stakeholders are specific in terms of what we know will be easy for those people at that level to understand. Okay. So that's how our engagements are structured in terms of multimedia engagements, including this one. We have digital presence everywhere. Then we have what we call even market storms, people that go to the level, level, to go and reach out to them and make them understand. So that's the way we've been doing things, and we are likely to continue and make it better along that line.
Thank you so much for that response. With the new laws introducing clearer but more structured obligations, such as the 30-day notification, you know, it's now a requirement. So talk to us about how LIRS is translating these statutory provisions into practical, accessible, and diverse stakeholders that are involved. I'm talking about the informal traders to the large corporates.
Good. Yeah. Like I said, let me be clear on this. The secret ingredient to our success in LRS is the fact that we have done a segmentation of our tax base.
Okay.
We appreciate the top echelon, the middle bulge, and then the base itself. So what you have is that our engagement has been structured along that line as well, so that we know what will be applicable to each level of the strata that we have. So at sometimes in the first quarter of 2026, we issued the first batch of public notices.
Okay.
And those public notices, they won't be the last, because what we have done is to have the first set out, and then the subsequent ones will come out. But we don't want to have a kind of information overload for the people. So some of those public notices were actually sector-specific.
Okay.
They relate to particular parts of the economy that this one affects you. Please take notice of what is expected of you. And if you have challenges with it, these are the numbers and these are the people that you can contact who will take you through, so that to ensure that you are in conformity and you comply with the new laws, so that we don't want you to fall foul of the laws. That's what we have been doing. And so our engagements runs across, or like I said, we have what we call relationship management for those people at the top echelon. Then, of course, our tax offices and whatever that engages the middle people. And then we have a whole directorate that focuses on the base. And they have what they call market storms. They engage them at their level. They go to them to engage with them. And that's what we've been doing. And that's what we continue to do in a very improved format.
And this is all in order to prevent unintended non-compliance?
Absolutely, because the penalties that we have for non-compliance now are quite steep. What we had before this new regime was that we were practically incentivizing non-compliance in the sense that the penalty in the law for not complying was cheaper than the cost of compliance. So a rational economic man would rather not comply, knowing fully well that the cost to him is much cheaper than, but now we have flipped that 180 degrees so that if you don't comply, because also under the law, they said ignorance is not an excuse.
Sure.
And we don't want people to fall foul of things that they have even done. You understand? And so that's why our engagement with them is to ensure that, well, this is what is expected of you. And we have made it much, much easier for you to do that because our system is digitized, and that's the best way to just reduce cost. And then if by any chance you still need additional support, we are ready to engage with you and provide that at no cost to the taxpayer. At no cost to the taxpayer, we will provide that.
Thank you so much for talking to us today. We still have quite a bit to talk about, but we'll be taking a short break right here. And when we return, we'll continue with this important discussion. Thank you so much for joining us.
It's a pleasure. Thank you.
So we're going to be including oversight into the real estate sector in the next break. Make sure you stay so you can learn a bit about the gig economy taxation and taxpayer safeguards as well. Stay with us.
Have you had a hard time with taxes and understanding tax administration in Lagos State and the complex nature of Nigerian tax law? Do you know what agency or tier of government collects the various types of taxes? Have you ever found yourself asking any of these questions? Join us for your favorite program, The Tax Talk, your infotainment program.
The new tax framework enhances oversight within the real estate sector through updated stamp duty rules, capital gains tax provisions, rental income reporting requirements. Now, do these changes introduce new taxes on property transactions, or do they reinforce and clarify existing obligations?
Okay. Your first poser is that, did they introduce any new taxes? I've said it is against the principle. So it is absolutely no.
Okay, fantastic.
Absolutely no. So no new taxes. Now, the second one is on whether it reinforces existing one and harmonizes them. Yes.
Okay.
So, and we don't have capital gains tax again. We have chargeable gains.
Okay.
And I'll tell you what the differences are. Now, under the previous regime, where you have capital gains, it is what you call a regressive tax rate. It's a flat 10% rate. Okay. So somebody at the lower end of the sold his assets and made a gain of 100,000.
Okay.
The person pays 10%, flat, boom. Okay. So it goes home only 90. The government takes 10. Now, a big boy also did something, made 1 billion.
Okay.
It goes home with 900 million, pays only 10. It is not fair. You understand? So what this new law has done is that you have chargeable gains. Whatever gain that you have will now be recognized as part of your income that will be subjected to the graduated tax rate. Okay. So that person that made a gain of 100,000 under this new law will probably pay 0.
Interesting.
Yeah. So he goes home with his 100. But the guy that now had 900 million, of course, most likely will pay at the rate of about 24% or 25%. Okay. Those are the key things in this reform that people should recognize. Of course, there was a pushback from those big people, and unfortunately, they were using the people at the lower end to fight their cause. That why do you want to increase the one on chargeable gains? It's understand. So there was a pushback, but luckily enough, we had a president that understands these things as well. That just go ahead, implement this thing, and then we will address your issues, the ones that you have. For transactions that we have had in the past, no problems, you pay at your 10%. But any new transaction that you're going to have, then it will be subjected to this new rate, which is fair enough to all parties, and that's the way people should say it. The stamp duties has been also been harmonized, so that in some areas you find that, in fact, we used to have 1% on contract and whatever. It's now flat or just 1,000 naira.
1,000 naira?
Yeah, that's it. That's what to stamp your contract, because your income from profit from that contract will eventually be subjected to tax under the income tax rule. So all those issues of duplication has been taken care of. Great. So that's what we have, and I think it's a win for all parties, win for the people at the lower end, win for the people at the middle end, and also a win for those people, even at the top end. They're not just about 2%. And the truth of what I'm saying is a win for them is that if they move away from this jurisdiction, Nigeria, and go next door, they are going to pay a higher rate.
Interesting.
So when people come around and tell you, because the rate even that we have now that we think is high, relatively to what we were doing before, is still well below what you have even across other jurisdictions. So essentially what we are trying to do here, as regards the rental income, what you have, that's why a new relief was introduced for people that are tenants. You understand? So tenants are supposed to be people that don't have their own houses. You understand? So also to protect them, that if you pay rent, government will relieve you to the extent of 20% of your gross income, capped at 500,000. So, but for you to claim that, you must report the person you pay the rent to.
Okay. So
we now know the people that have been collecting rent that have not been filing their returns on it. So that way, it also helps us to bring all those landlords and landladies into the tax net and then letting them pay what they should pay to the government. Yes.
All right. Thank you for breaking it down. In fact, you covered every single aspect of the last question in such a clear way that it's making me rethink some of my former perceptions.
Right.
Thank you so much. Now, let's move on to something else that's been making the rounds, talking about the technology platforms, fintechs, ride-hailing services, food delivery companies. Now, they become very significant employers in Lagos through the gig economy and all those arrangements. Now, how is LIRS working with these platforms to ensure appropriate taxation of gig workers, given that it's a very unique structure and quite a few income streams?
Yeah, thank you very much. Part of the misconception that we also had, but it was not one of the top ones, was that people believe that income from that are not taxable, and it is not true.
Okay.
All income are taxable, except those ones that are specifically exempted or zero-rated in the laws.
And those people are?
They are not.
Okay.
But yeah, because they are operating here, they are generating income from this environment, using the infrastructure that all of us paid for. So ideally, they also need to contribute to the pool. But before, we were not seeing them. When I say we are not seeing them, it's not that we don't see them, but we don't see their financial footprint.
Okay.
Now, what Lagos is going to do is very simple. Because the NRS, that's the National Nigeria Revenue Service, former FRS, is the competent authority for Nigeria. So it's in a better position to engage directly by all those platform providers.
Okay.
They are obliged to give some reports to NRS. So we will, through the intermediation of the JRB, that's Joint Revenue Board, be able to access some of this information that relates to those people that are operating in that sector that are residents in Lagos. So, and once they know that we can see them, I think, like I always tell people, if you put this CCTV, even if it's dull, if it's not working, you see people will just do the right thing.
They will comport themselves.
Exactly. So now that they know that we can see them, I believe that they will come forward. If they don't come forward, we have the information and then we'll go after them. It's as simple as that. So all income, like I said, is very important, are taxable, except those that are specifically exempted in the law or zero-rated. That applies zero rates on it.
You're still watching the Tax Talk. Tax administration is not only about compliance, it's also about impact. The government of the day continues to invest the taxes of its citizens in projects that seek to elevate the quality of life of residents, especially within the state. Up next, Tax Did It. An informed taxpayer strengthens the system. Tax reform succeeds when legislation and administration, as well as public understanding, move in alignment. Thank you so much for joining us today. My name is Titilayo Oyinsan. See you next week on the Tax Talk. Goodbye for now.